All right, everyone, welcome back. We're about to take a deep dive into something that could be, well, kind of a game changer for your retirement planning.
Oh, yeah, this one's pretty interesting.
It's the Clear Spring Life ViStar Fixed Indexed Annuity. Have you heard of this one?
I have, yeah.
So imagine, right, you're looking at your retirement savings and you want them to grow, obviously,
Right.
but you also don't want to lose sleep worrying about the market crashing.
Yeah, that's the big fear for a lot of people.
Right. And this annuity, it's kind of designed to address that, aims for growth, but with a safety net.
Exactly. It tries to find that balance.
Yeah, that sweet spot. We've got some info here from Diversified Insurance Brokers, and it looks like they've packed some pretty clever features into this thing. I'm excited to dig in.
Me too. Let's see what they've come up with.
So, okay, first things first, can you just kind of break down for us, like what exactly is this ViStar annuity?
Sure. So it's called a single premium deferred annuity. And that might sound a little jargony, but it's actually pretty straightforward. Single premium just means you make one lump sum payment upfront.
Okay, so like instead of making regular contributions over time, you just put in a big chunk of money all at once.
Right. Think of it like maybe you sell a property or you get an inheritance and you decide, hey, I want to put this money to work for my retirement.
Got it. Makes sense. And I see here that the minimum investment is pretty reasonable too. $5,000 for qualified retirement accounts and $10,000 for non-qualified.
Yep, that's right.
So it's not like you need to be a millionaire to get started with this.
Exactly. They try to make it accessible to a wider range of people.
And there's also this interesting feature where you've got a 12-month window to add more contributions if you want.
Oh, yeah, that's a good point. So you can get started with that initial investment, and then if you have more funds become available over the next year, you can add them in.
So even if you don't have the full amount you want to invest right away, you can still get the ball rolling.
I like that. Okay, now let's talk about this index crediting thing. That's the part that always kind of makes my head spin a little bit.
Yeah, it can be a little confusing at first. But think of it this way. Your money gets linked to the performance of specific market indices, like maybe the S&P 500 or the NASDAQ.
Okay, so you're basically riding the wave of the market, but with some guardrails.
Exactly. If those indices go up, your annuity has the potential to earn interest based on that growth.
So you get to participate in the gains, but
But you don't lose money if the market takes a nosedive. That's the 100% principal protection they're talking about.
right. So even if the market goes crazy and everything plummets, your initial investment is safe and sound.
That's the idea. It's supposed to give you peace of mind knowing that your nest egg isn't going to vanish overnight.
And I bet that's a huge relief for a lot of people, especially as they get closer to retirement. They don't want to see their savings wiped out just as they're about to start relying on them. Absolutely. It's a big concern, and this type of annuity aims to address that fear.
Okay, so it's got the growth potential and the downside protection. But what about flexibility? Like, what if I need to access some of that money before retirement?
Well, the ViStar annuity has you covered there too. After the first year, you can withdraw up to 10% of your account value annually without any penalties.
Okay, so it's not like your money is completely locked away. You do have some liquidity if you need it.
Right. It can act as a sort of emergency fund if you have unexpected expenses pop up or if you see an opportunity you want to jump on.
And I see they also mention waivers for terminal illness and nursing home confinement.
Yeah, those are important features to consider. They provide extra security in difficult situations.
Okay, good to know. But, life happens, and sometimes you need more than just 10%. What happens if I have to withdraw a larger amount? Are there any downsides to that?
Yeah, that's where it gets a little bit tricky. If you exceed that 10% limit, you could be hit with surrender charges and a market value adjustment. And those can really eat into your payout.
Oh, so it's not just a slap on the wrist. It could actually cost you a significant amount of money.
Potentially, yeah. It's important to understand how those charges work before you make any large withdrawals.
So when they say market value adjustment, what does that actually mean in plain English?
Basically, it means that your payout could be higher or lower depending on what interest rates are doing at the time.
Okay, so if interest rates have gone UP since I purchased the annuity, I might actually get a bonus. But if rates have gone down and my payout could be reduced.
Exactly. It adds a layer of complexity,
Yeah.
and it's definitely something to discuss carefully with a financial advisor.
Got it. So you definitely want to run the numbers and make sure you understand the potential risks and rewards before making any decisions. Okay, let's fast forward a bit. Let's say I've reached the end of the surrender charge period. What are my options at that point?
Well, you've got a few choices. You can continue earning interest as you have been. You can withdraw everything penalty-free, or you can annuitize your investment.
Annuitize. Now, that's a word you don't hear every day. What does that actually mean in practice?
Basically, it means you convert your savings into a stream of regular payments, like a paycheck, that you receive for a set period of time or even for the rest of your life.
So it's kind of like creating your own personal pension plan.
Exactly. It can be very appealing for retirement planning, especially if you're looking for a predictable income.
Makes sense. And what about the death benefit? I see that beneficiaries receive the full contract value.
That's right. And one of the nice things about it is that it bypasses probate.
Oh, so no messy legal battles for my heirs to deal with.
Right. Probate can be a lengthy and expensive process, so bypassing it can save your loved ones a lot of hassle and expense. It helps ensure that your assets are transferred smoothly and efficiently.
So peace of mind for me during my retirement AD for my beneficiaries after I'm gone. Okay, last but not least, how about Clear Spring Life itself? How solid is this company?
Well, they have a pretty good reputation for financial strength and security. They've been around for a while, and they have a strong track record. But of course, it's always a good idea to do your own research and make sure you're comfortable with the company behind any investment you make.
Absolutely. Never hurts to double check and make sure everything is on the up and up. Okay, so if we could just kind of sum it all up, it sounds like the ViStar annuity offers this kind of unique combination of growth potential with downside protection. And it throws in some flexibility for withdrawals and long-term planning, too.
Yeah, I think that's a fair assessment. It tries to offer a little something for everyone, which can be appealing, but it also means it's important to really understand the specifics and see how it aligns with your individual needs and goals.
Right, because it's not a one-size-fits-all solution. What might be perfect for one person could be totally wrong for another.
Exactly. And that's why it's always a good idea to talk to a financial advisor, someone who can look at your whole picture, your risk tolerance, your income needs, your long-term goals, all of that, and help you figure out if the ViStar annuity is a good fit for your personal circumstances.
Great advice. Don't try to navigate this stuff alone, folks. Get a professional on your side. All right, thanks so much for breaking all that down for us. It's been really helpful.
You're welcome. Glad I could shed some light on it.
And to all our listeners out there, thanks for tuning in. Hopefully this deep dive has given you some food for thought as you plan for your future. We'll catch you next time.